Welcome, ladies and gentlemen, live from the Invest Fair 2022 here in Stuttgart, and we are really happy that we can do it again in the real environment, that we can meet real people, personal talkings. That's fantastic. Tonight, the 9th German Resource Night, also with a good 300-400 participants. And I have here a long-term company who participated already a lot of times here at the Invest, Saturn Oil and Gas. And with me here is Scott Sanborn. Scott, how are you? Good morning.
Very nice to see you again. Thank you very much for having us.
Yeah, perfect. And thanks that you are joining us here at the booth and also for the interview. Saturn Oil and Gas, I know the company a lot of years, and I must say, you guys started to deliver now. But before we go a bit into medias res, remind us shortly, where are you based and what are you doing?
Sure, so we're a Canadian oil and gas company based in Western Canada, specifically in southeastern area of Saskatchewan. Mm-hmm. We have approximately 8,000 barrels a day of production.
8,000 now?
About 8,000, wow. Just shy of 8,000. We're about 7,500 right now and projected between 8 and 8,500 by the end of the year. So we're growing about 3,000% year over year, and we're looking to expand as we go.
Wow, that's a nice growth rate, I would say.
I would say, yes, we're very excited about it as well.
I remember really when you had to finance, when you were looking for oil fields to do the wells, etc. So now it looks like you have a real producing company. That's right. I mean, 8,000 barrels is really a lot. What are your all-in costs per barrel, and what is your reference price? For what do you sell that?
So right now we sell on WTI, so the world oil prices. Mm-hmm. This year projected we have approximately $170 million of EBITDA prior to hedging and about $80 to $90 million after hedging, which results in adjusted funds flow of approximately $70 million year over year.
Super. What's your market cap today?
About $90 million market cap.
So you do it, your EBITDA is your market cap.
Yeah, that's right.
That's a bit of a mismatch, I would say.
Absolutely, and that's what we're trying to get out, and that's what we're trying to sell. So right now we're completely undervalued. So right now we're trading at about 1.2, 1.3 times. Industry average is about 3.5 to 4. So right now we're just getting the name out, and we're getting our name out there to try to increase the price there.
Super. Okay, so lots of potential.
I would say.
I thought that you have you do like 95% oil and 5% is natural gas, I assume?
That's right, natural gas and liquids. So right now we're about a 96% oil liquids weighting, which actually increases our netback. We have a very, very strong netback with high oil production as well.
Okay. I think one of the points in the past was that always the life of the wells was so short. But right. I think you changed that also dramatically. So what reserve life do you have? And where do you see also exploration potential for the future?
Yeah, that's a great question. So right now we have two core operating areas. We have our Viking asset, which does have a little bit of a higher decline rate of about 20 to 30%. With the Oxbow acquisition, it's about a 13% decline rate. So what that equates to is, we can bring these wells on, they produce 10, 20-year average reserve life per well. Mm-hmm. So for us, we will split our capital expenditure program, which is about $50 million this year, about 20-25% of the Viking, and the residual going to Oxbow at a very, very low decline rate.
Okay, wow, super. So I saw in your presentation 19-year reserve life.
That's right.
And can you replace every year what you have produced?
We have about 400 booked drilling locations right now. So we have, on average, with our current rate of production, about 20 years of reserve life index, which we can always plow the capital back into those and keep our production base stable.
Okay, super. Yep. So it looks like, let's put it that way, oil is really on the way up still.
It is.
I saw this morning Brent is already, again, $109, so that is amazing. Yeah, WTI is almost the same.
Yep.
But I think also it will stay high. So it means for you guys, you will make wonderful cash.
That's correct.
What you going to do with the excess cash? Do you want to pay a dividend, or what do you want to do?
Well, for us, I think right now, one of our main points is debt repayment, obviously. We just did a big debt consolidation and took a piece on there. So a piece of our funds will go towards debt repayments, and a piece will go back to the drill bit. So we think about 50% debt repayment, about 50% in capital expenditures. Once we reach a certain amount, we are discussing certain things such as dividends, share buybacks. That could potentially come in the near future.
Okay, super. Then debt repayments, how much debt do you have? What is cash in the bank?
Currently, right now, we have about $20 million cash in the bank with a net debt position of about $70 million.
70?
Yes.
Okay. Well, that's manageable, I would say.
Yes.
Super. What are your future plans? I mean, you said you have like 400 drilling locations.
Yep.
Could you imagine to expand outside Saskatchewan, let's say going to the US, or
And that's a good
ways?
question. So right now, one of our competitive advantages, we have a very strong Saskatchewan ownership base. A lot of our executives are from there, a lot of our teams from there. So we have a competitive advantage in that we know the field guys out there, we know the service providers. We feel like we can drill a well better, faster, stronger than a lot of our peer group out there. So to the extent we can capitalize that, we will. And we're always looking at different opportunities, whether that's an expansion further to Alberta. It really depends what's out there for us right now.
Okay, super. Coming to ESG,
Yes.
I mean, it's a topic everywhere in the press. We have to talk about it. Oil is bad. That's what they tell us, yeah? But we need 52% of the world oil production goes into chemicals, cosmetics, pharmaceuticals, so it's really an important commodity and resource. How do you produce? Do you use, let's say, chemicals? How do you take care of the environment?
Well, that's a good question, and I think the way energy production goes right now gets a bit of a bad rap. Now in Canada, we have some of the highest energy standards and social responsibility standards in the entire world, and we're mandated to do that. And beyond that, Saturn specifically has gone over and above with certain ESG reporting requirements. We do have approximately a $20 million deposit with the Saskatchewan resource government right now. So what happens with that, it's actual cash held by the government that can be put towards old abandoned wellbores, which Saturn is actually actively pursuing. In addition to that, we're applying approximately $14 million government grant to abandoned wellbores as well. So all in all, that takes care of approximately 5-7 years of our abandoned reclamation liability towards our wells, and reclaiming the land back to its original state, back to farmers' fields, that sort of thing, so we can replenish the earth.
Wow, okay, super, fantastic. So we can say it's almost like clean oil production.
It is very clean oil production.
Fantastic.
Yes, absolutely.
Great. Super. Yeah, then thank you very much.
Well, thank you very much for having us.
For the future.
Yes.
And also I should say that I'm a shareholder since yesterday.
Well, we very much appreciate it.
Yeah, thank you very much.
Okay.
And talk to you soon.
Again, see you later.
Yeah, ladies and gentlemen, there was Scott Sanborn from Saturn Oil and Gas, and you heard it. What an amazing development the company has done. If you remember, like 5-6 years ago, it was like, going the normal way and really seeking for new wells, seeking for financing, etc. Now the company makes really money. The company grew from 5 people up to over 80-90 people now working with them. But what I really like is 20 million in the bank, 70 million only is the net debt position, and they have 19-year reserve life. That's exactly what counts. And the company makes money, and probably they will pay in the near-term future a dividend. You should check out Saturn Oil and Gas. Thanks for watching us, and bye-bye from Stuttgart from the Invest 2022.